This is our video blog for June 7th, 2011. And like most days, we really want to buy the super strong currencies versus the weakest. Today, the euro was most consistently the strongest. A little bit before midnight, it had a brief amount of strength, a lot of strength at 11:30, and it carried over, most of the day with a little bit of weakness right here that subsided. Usually, when the daily, weekly, monthly trend is this strong and you had incredible strength, a little bit of weakness that then tails off, you can usually expect some strength coming back, as you saw here. A little bit of weakness, it's safe to assume most times that the strength is going to resume, which it does here at 11:30. Earlier last night, the yen was weaker than the dollar in real time, but the dollar had a much weaker weekly and monthly trend, which is underneath the real-time trend. So basically, you could have bought the euro against the dollar or the yen last night. You can see it's underneath the hourly moving average, which typically when currencies are underneath there, they're more likely to go down, but once it breaks it here, it's very likely to go up. You can see absolutely incredible strength right here, and this just explodes up. One of the new tools we're about to release this week is using this technology to tighten our chandelier stops. It's called FX IntelliStops. It's not available yet, but it will be soon. And you can see it does a really good job of getting into this trade really soon right here at 75, and it gets you out all the way up here at the top for a massive win in that trade. It's super tight. As long as the trend's strong, it trails the stop. As soon as the strength subsides a little bit or a major weakness comes in, it will yank the stop up even more. So this is a wonderful way to both get in and out of trades, and it's designed to keep traders into trades longer so that when trades take off like this, you can be in them for some huge moves. The only key and the only secret to trading is small losses, big wins, and this not only improves timing of entry and exits, but it also hopefully should allow new traders who are afraid once they're up 10-20 pips, they don't want that 20 pips to disappear. Having a super tight stop that's only 3 to 5 pips underneath the price, and sometimes you can see the price right here is at 09, the stop's down here at 04. It's 5 pips away. If you're up 20 or 30 pips, who cares about giving only 5 pips away? But if you have a much wider stop, let me just put a regular default chandelier stop that a lot of people use around the country on the chart. You can see that this stop's much wider. Right here, it's down here at 98 versus 04. It's 6 pips closer. It's cutting your loss, or you're giving back your profit in this instance. You would make 6 pips more than you would by that other trailing stop, and this one got you out here right up at the high here at 68 versus 62 for an extra 6 pips profit in this case. Let's look at the euro yen, another super strong currency. You can see this one also was hovering right here near the hourly. It came up and found resistance, came up and found resistance. The weekly and monthly trend are slightly up, breaks out right here, and it just goes up. You can use our new FX IntelliTrend IntelliStop, or you can wait for a 2-wave move, and usually at the first or second fib target, the market's usually exhausted and about to reverse, especially at our white upper containment bands. Another currency that was super weak today was the Swiss. We all know how strong the Swiss is longer term. The weekly and monthly trend are incredibly strong. It's one of the strongest two currencies right now. But today was a counter trend day. So, probably the best one to trade the weak Swiss against was the strongest currency, which in this case today was the euro dollar. Euro Swiss, would have been the highest probability uptrend. And you can just see once it broke, again, once the currency is underneath the hourly and doesn't get a pullback down and it breaks out, that's a high probability place to go long. Goes up and pulls back, decent place to go long. And let's analyze this with our new FX IntelliStop and see how this did in getting out. You can also use this as a timing tool. Long, I think right here at 97. First trade, I guess, got stopped out right here with a small profit. You go long when it breaks out over the high here. You're out again right here at 36. So you made about 20 something pips there. It's kind of going sideways, breaks out again right here at 43, out of this trade here at 60 for 17 pips. And sometimes currencies are above the upper containment band, and they usually reverse up there. I would personally, after you see a 2 or 3 bar sideways move like this, go long right here with the stop underneath the low, and then the trailing stop was wide at first, which it normally is. It only tightens it after a few bars. So in some cases you got to pull the trigger before the stop gets hit. You're in here, and you can see this still has you long the currency. You're in this around 64, and the stop right now is at 98, and it hasn't closed underneath there, and it's kept you in this trade all the way up. Let's look at some of the other pairs you might have traded today. CAD had a lot of strength today. Unfortunately, the weekly and monthly trend are down. So when you see a strong currency where the longer term trend is down, usually, if I was going to trade that currency, I'd look for small 5 to 15 pip profits and not expect as big a moves as you saw in the euro dollar, euro yen, or even the euro Swiss. You're not as likely to get 30, 50 pip moves in a currency that may have strength today. However, the longer term trend's down. It doesn't make any sense. So, consider these scalping opportunities. If you see, some strength followed by very little weakness, it's possible that strength resumes here at 230, which it does. Maybe an hour or two is the max hold time. The dollar was extremely weak at that point. The good news about selling the dollar CAD is the dollar's longer term trend is weak too. The CAD's actually weaker than the dollar, but this is a quick little scalping type trade for maybe 5 to 25 pips max, and you can see the price was underneath the hourly, and in this instance it actually generated more profit than you would have expected. A nice little pullback trade right here, and then it collapsed. Let's put the new IntelliTrend stop on here, which I hope to release later this week. So you can see this also does a pretty good job of timing the entry right here around 89. I would have gone short maybe at 90, 2 pips or 1 pip earlier, and it kept you into this trade all the way down to about right here at 46. And this trailing stop sometimes widens. So if you see a stop right here and then the market's kind of going sideways, it's way underneath the band, you might want to get out down here. I haven't put in the extra code to tighten stops even more when it goes underneath or above the upper or lower containment bands. And if you want to look for a counter trend trade here, it's pretty exceptional. It got you out of that trade right here at 60, and the max move up was 68. So it caught, if you bought down here underneath the lower containment band at our statistical likely low, this is our trading zone, which is available to all of our mentor students. It frequently nails the high and low of the day, and it did today again in the dollar CAD. The weekly and monthly trend are slightly up in this, so buying a weak currency that's weak today, but the longer term trend is slightly up, there's more likely to have some buyers down there. If you bought this around 39 and got out here, you made a little over 20 pips. And if you flipped and went short again right here, you can see that also made money. If you shorted here and got out, you lost a little bit. Waiting for a deeper pullback is always a safer bet than selling it right near the lows, especially at a very high probability low that's not likely to go under.